What's up, guys? We are live. We wanted to just come on here real quick and make a video about our thoughts about the crypto market post the ETF. We're going to show you guys some data. You're going to see that unless the demand increases, man, we might be in for a correction here. Like me and JT coined the term buy the rumor, hold the news. People have definitely been holding, but as you'll see from what we're about to show you here, I wouldn't be surprised if here pretty soon people are going to start selling. You like this kind of content, if you want to help the channel out, help us get the message out, subscribe. JT, you ready to get into it, man? You got anything to say?
Yeah, I just like to add, man, I think it's kind of cool that I coined the term, actually. I didn't think about that. So thanks for pointing that out.
Well, we both came up with it. Say, no, I'm just playing.
Yeah, let's jump right into it, my man.
All right, guys. So as you guys know, last week we had all of these ETF get approved except for Grayscale, right? Now, we were saying a few times, like, man, Bitcoin's gonna have a floor that it can't go under just because they're gonna have to buy Bitcoin to be able to fill orders. Right. But if you exclude GBTC, we're just gonna call it Grayscale because it's a tongue twister. It's only been buying volume of 1.5 billion,
but there were $4 billion in inflows.
It says here, according to Fidelity, ETFs had nearly 600 billion in net flows. I guess that's not inflows.
Yeah, because that's outflows too. I'm sure it was 4 billion. And then we had a sell-off in Grayscale like today or something like that.
Yeah, okay. So let's say the inflows are 4 billion. All right, because it doesn't say it clearly on Google. But if the inflows are 4 billion, well, they ain't 4 billion now. Like, so if you look at this chart, guys, you can see that each day the custodian was buying more and more Bitcoin, right? You saw 228. This is the number of Bitcoins, 2,000, 11,000, right? And now it's a TVL. We can just look at it as TVL, excluding Grayscale, 1.5 billion, with Grayscale 27 billion. If this doesn't continue to increase more than it has been, I expect more of a sell-off, because now that the ETF is here, there is no anticipation for an ETF. Now the ETF has to perform. And I feel like I'm always using basketball analogies. Like, you know, if you know LeBron's coming in town, you're going to anticipate that he's going to ball out. But when he steps on the court, he still has to ball out to keep selling those tickets so that people can know that he's still good. So just because the ETF is here, that doesn't mean like, oh, the market's just going to stay up. Like, it still has to perform and people still have to buy the ETF. And right now, people are selling more than buying, and markets are supply and demand. So if it's more selling than there's buying, guys, what does that mean? That means price to drop. JT, what do you think about this, man?
Yeah, no, firstly, this is inflows. So it's about 1.5 billion in inflows in the first 3 days of trading, first 4 days of trading here. I think, yeah, that is way below all of our expectations.
Yeah.
Everyone's, to be honest. I guess I'm not surprised that, you know, there wasn't a huge amount of inflows from larger institutions in the first week for whatever reasons they may have, right? Maybe they want to let it marinate a bit, you know, let it get seasoned a bit. I'm not sure.
How do you marinate something that isn't tangible?
Oh, yeah. No, but yeah, like, I'm not sure, man. This is it's interesting, but like you said, it shows the lack of demand, which I guess some people kind of called out before. It's like, why buy an ETF when you could just buy Bitcoin? And a lot of people say it'd be easier to buy, but I would argue it's way more difficult to buy an ETF than just go buy Bitcoin, 100%. Like, you could just open your Coinbase literally and just buy. I mean, you could download the MetaMask app on your phone now. In 2017, 2018, you were not able to do that. You had to use it as a fucking browser extension. So now it's like easier than ever to just go buy some raw Bitcoin.
Go to an ATM.
Yeah, you can go to an ATM. If you want to buy an ETF, you got to set up a brokerage account. You got to do all this extra stuff. You got to go through KYC, AML. I mean, you got to do it with Coinbase too, but you get my point here. And so I guess I'm not that surprised with the grand scheme of things. I think we all were kind of blinded by the excitement of the ETF because we imagine, you know, $50 billion coming in the first month or whatnot. But I guess we should have expected it wouldn't happen that way.
Okay, guys. So we were talking about how, let me go to the monthly. Let me look at the date of the gold ETF approval real quick. November 18th. Wow, that's my mom's birthday. My mom's birthday was on the day the ETF approval.
You go, baby. No.
Okay, guys. So on this chart is the gold chart, and I want to talk about this. The ETF was the beginning and the end for gold. And what I mean by that is, people compare Bitcoin to gold all the time. But one thing that's different is that gold is way harder to custody, right? And it's also no way to sync up all of the physical gold with the paper gold derivatives. So it's like it's easy to go 100x short if you know your bank, if you're a bank and you have gold in your vaults, and people aren't going to do it because it's hard. Now that Bitcoin is an ETF, you have these custodians. When you buy an ETF, you're buying a share that represents real Bitcoin, just like you used to get $1 that represent actual gold. When an ETF came out for gold, it came out on my mom's birthday, November 18th, 2004. You saw this meteoric rise, right? And then you saw it fall, and now it's been consolidating. And it's been consolidating at a time where inflation was high, which is like it's like giving Stephen Curry an open shot. Like that's like his specialty. We saw gold not perform well because of an ETF. And a lot of people think that the same thing is going to happen with Bitcoin. Now, I do think the same thing is going to happen to a degree, but I don't think it's going to be as bad because of the reasons I just described. Gold is heavy. People aren't going to come to the bank, bring their truck. They're not going to want to be seen driving away with a fuck ton of gold. But with Bitcoin, you can withdraw it from wherever it's being held, from the comfort of your home, without anyone knowing, without you having to exude any energy other than the energy of you thinking that you want to do it. You don't have to flex any muscles and pick up it. So given that is a fact, I would imagine that custodians are going to be a little bit more responsible when it comes to custodying Bitcoin and not doing like a fractional reserve custody practice. But only time will tell. JT, what you think?
I actually think this chart could be a bit misleading, actually. So if you look at the date of the ETF approval, November 4th, 2001, if you zoom in a little bit, so you're on monthly candles. Okay, so if you look at the date, now this is an estimate of the ETF approval. I'm sure we're not on the exact date. It says November 22nd, 2004.
So what the day after, something like that.
Okay, so on the 18th, it was, you said. So firstly, there wasn't any type of initial spike because the ETF approval. So let's start there. There wasn't a huge like, oh my God, gold ETF, here we go. It's almost like exactly what happened in Bitcoin so far. It just
almost
stayed
a year later.
Yes, but here's the actual other point. So it basically consolidated for a while. But this chart also coincides with monetary policy after the dot-com bubble, which pretty much in all of the 2000s, we've been in an easing environment, except for recently, pretty much. And so that spike in gold, we saw that jump, one would argue, because of currency debasement during that time.
That's a good point.
Or during the 2000s, because of the excessive money printing due to us getting down to zero interest rate policy before zero interest rate policy was a thing. And then it became a thing again in 2008, after we tried to get to a normalized level. And so one would say, that this coincides with monetary policy after the dot-com bubble. And that's why we saw like the massive move in that long-term trend in gold over the next decade right there. And so, all in all, long-term, I do think ETFs for Bitcoin will help the price, just because of the money that's not in it, that is held by, pension funds, sovereign wealth funds, and RIAs, registered investment advisors, their clients demand as well. And so because of that capital that's still sitting on the sidelines, I do think that it will benefit in the long term. I just think that, like I said, we overdid it in our expectation. And now that it's actually here, I think we can see it with a clear view. And the more you think about it in terms of even, someone who has millions of dollars who's invested on their own, it doesn't make sense for them to go buy the Bitcoin ETF. They could just go buy it themselves on an exchange or, have someone do it for them, probably for cheaper.
Yeah, no, those are all good points. Man, your background looks like the cover of an Anra album. Yeah, but yeah, man, the ETF is out. The genie's out of the bottle. So we'll continue to watch how it performs. I do still think we're going to be off to the races here after one more correction. But, that's why you always have some cash on the sidelines just in case, man.
Always.
Yeah. You want to go and take us out?
Yeah, man. Appreciate you guys as always. If you enjoyed this type of content, please let us know in the comments. Tell your friends. Leave us a like as well. That's the best way to show support. Just like the video. And we will see you on the next one.
Peace out.